Broad strength today in the S&P 500. Financials did well, home builders did well, small caps led the way higher today. Another day with small caps outperforming. I'll break it all down here in under 5 minutes with our market outlook preview. Of course, as always, if you want the full market outlook video as well as the trade idea that we do at the end every day, and as well, and access to the market outlook live, where we manage all these market outlook trades day by day. The link to that is at marketscholars.com. It's all available for you at marketscholars.com. The link to that is down in the description below. It's also in the pinned comment down below as well. Something, heads up, tomorrow I am heading out of town for a week. So there will not be a market outlook video tomorrow. There will not be a market outlook video next week, Monday through Friday. There will still be a market outlook live tomorrow, so I'll pre-record one before I leave. It will be available for all of our members to watch because we will be finishing up our July expiration trades. We've got quite a few that are outstanding, so we'll finish that up tomorrow, but then no market outlook or market outlook live all next week. So the next market outlook after today will be Monday the 28th. So keep that in mind if you're looking for the market outlook over the next so many days, and this is the one you're finding. That's the reason why I'll be out of town. So let's go ahead and get started. Stocks held up well again today with the S&P 500 continuing to trade comfortably above the 30-day moving average, up over the 2.5% mark. Buyers stepped back in after this little bit of a pause, this little near-term decline. We got the bounce that we totally expected. For those who are watching the market outlook, the full video, this is exactly the bounce that we were looking for, and we got it, helping the market stay just within the striking distance here of closing here at all-time highs. More importantly, we're seeing that strength broaden out beyond the large cap tech, of course. Small caps outperforming today, up 1.2%. It's a positive sign for breadth and risk appetite as we're in the stage right now where the Russell 2000 is playing catch up. Financials, home builders were actually kind of in here too. Industrials led the way today. So these are kind of classic cyclical areas beyond your typical XLY, XLK, XLC spots. That's a healthy rotation here. Look at all the sectors that actually outperformed the S&P 500 today, and beyond XLY and XLC, the other sectors that underperformed were the ones that you would expect to underperform, with healthcare dropping the most, down more than 1%. So even though the dollar, you can see, rallied up here to almost 27.50, and then also the 10-year yield rallying up a little bit here, almost a basis point up to 4.45%. Stocks didn't flinch. That's a good sign. That's a good sign of resilience and improving confidence, especially with both of those kind of sitting at highs and with the potential to roll over and add some fuel to this fire right now in the S&P. So that's where things stand after today's session. Broad strength, key sectors, important sectors leading the way higher, and the market holding up despite the fact that, again, higher dollar, higher yield. As always, if you find these quick updates helpful, make sure you give us a like down below. Click that like button. That goes a long ways for us. Subscribe to the channel, click the bell so you're updated, you're notified whenever these videos are posted, and then share this video. Click that share button and share it with anybody else that you feel like would benefit or be interested in this type of information. All right, let's dig into the key theme I'm watching after today's action and how the market's reaction is shaping expectations moving forward. Today wasn't about explosive gains. It was more about some of these sectors here starting to participate a little bit. Financials, you can see that nice little bounce there. Home builders, regional banks, leading as small caps, which these are all S&P 500 sectors, but they're all correlated more with the small cap index than these are up here at the top. In fact, you can see some relative weakness again in discretionary and communication services, not as much of a bounce there. That's supported by small cap strength in the Russell 2000 mid caps catching a bit as well. Clear signs that breadth is expanding. You can see the small caps, after that breadth bomb that we had on Wednesday or Tuesday, bouncing back up above all these moving averages, just short of the 50-day moving average here. This is again the relative strength of small caps relative to the NASDAQ 100. As I mentioned, the dollar rallied up here today, but you can see it's kind of sitting here, especially if you look at the dollar index itself, sitting right at the 50-day moving average. So we had a strength in the dollar and we had strength in the 10-year yield, but even it's at the top of its sideways range. So they're both kind of high. And so despite the fact that they both were up, the market's rallied, and that's a good sign from in terms of economic resilience and expectations going forward. But again, as they potentially hit these levels of resistance, the top of the Fed funds range for the 10-year yield or the 50-day moving average here for the dollar, then, again, if and when they roll over, and that should provide some bullishness for equities going forward. With breadth improving, back improving again, coming off of that bomb we had on Tuesday, cyclicals catching a bid in the other areas of the market, and the intermarket signals kind of holding firm. We're going to watch how this rotation continues to play out as we move deeper into earnings season. And that's actually where today's trade idea kind of fits in as we start heading into more and more earnings being released by the time we get to August options expiration. As always, if you want the full market outlook breakdown, including today's trade idea, technical analysis, macro commentary, and how I'm positioning going forward from here, what our expectations are going forward, it's all inside today's market outlook video. It's at marketscholars.com. Of course, the link down below, as I mentioned before. This video is available for all of our subscribers to Market Scholars, starting at the foundation tier, which is only $29 a month, or you get 2 months for free for $299 a year. Of course, we've talked about before the value of that of the trades we do every day in the Market Outlook Live trade tracker shows that that's a very small cost for the value that you get out of it. Check it out. You'll see for yourselves. You can just do it for a month. Cancel anytime and see for yourself how it is. It's like everybody else. We have hundreds of people that are subscribed and watching those videos day after day. Again, thank you very much for watching. Remember, subscribe to our YouTube channel, hit that like button, share it with others. Follow us on social media, on Twitter, Facebook, like our stuff there, share it with others as well. Share the Market Outlook post too. Thank you again. Remember, no video tomorrow, no video the rest of the week, next week. So the next Market Outlook video will be Monday, July 28th. Thank you very much for watching again, and we'll see you all next time.